new people. You can talk here. Now you can talk. Okay, so just make sure you guys have the push to talk ready. So I am not showing you guys any candles at all on the screen. I want to teach you something to be not biased towards the price and not to look at the price as in, oh, I bought the calls here, it'll probably have to go here or whatnot. I'm trying to help you guys eliminate the idea that you have a bias towards being long or short. I'm simply going to help you draw the demand, supply and demand zones using no candlesticks at all. I have no idea where the candlesticks are. I can tell, 437.98 is where it's at now. But besides that, I really don't know much. So let's just start. Each one of these sessions that you look on the screen from, let's say, from here to here is one volume profile. That means for the day, this is how the volume was distributed. The highest volume for this day, I think it was Thursday, the highest volume traded was at 456.42. This level is fairly important because it's also a virgin POC. The difference between virgin POC and the POC is that the VPOCs, as we call them, they have not been retested. When the POC is not retested, that means it's a virgin POC. So what I simply do on my chart, if you're new to Thinkorswim, is I right click on this, I change the name here, and I will put the VPOC and usually the date, whatever that date was. I don't know, what is it, 120? That's one shitty thing about Thinkorswim. It just gives you a days below. Then I look at the volume on this one, and I'm like, okay, well, I'm looking for closest distribution of volume that kind of falls off. And if I look at this one's pretty good here. It looks like, this is the area, and you have three POCs that are fairly lined up. So even if you want to grab the high value area of this one, which is called right here, this is called value area high, the top of this blue box. The bottom part of the blue box is called value area low, right here. And usually you can make some trades between this. I'm not going to go over this in this call. I just want you guys to do some homework and kind of start understanding this on your own instead of me babysitting and telling you everything. You'll have to do some digging, right? But now that you understand the structure of it, right? You have the volume area low, the volume area high, and then you have the POC. If it's untouched like this one and never came back here, well, I don't know if it did or not. I'm assuming it's VPOC because I know we closed way below here. So let's say that this one's still a VPOC. Then what I do, I'll look at these prices here and I'll just mark some levels based off what I'm seeing here. So here's one right here. There was one right here. And then you see that there was a POC right here, or a VPOC at one point. It went up. This was a VPOC here. So then, you have some levels on the top side too. So the VPOCs work on the top side and the bottom side. So here, and we mark these, right? So now, most likely this one is going to be a VPOC here. And I'm not sure. I don't have the candlesticks yet. But now, whenever a VPOC shows up on the bottom side, you can expect a bounce. Usually that's where the buyers kind of show up. So if you think about this right here, on this date right here, I'm circling right here, this day right here. What happened is there was a lot of buyers, right? This was October, month of October. A lot of buyers were kind of happy here and they wanted to drive the price up. So they drove the price up a lot. They came back close to this date on testing it, but they never allowed it. So it kind of went to this level here. And they never dropped it to this area that was not tested again. What that means is that there was a guy or multiple hedge funds or individuals that had their bets and their orders unfilled here. Usually what that means is that they're not going to chase like retail chases. They're going to leave that order there and potentially even move it down when they see the blood in the market to basically recover the shares that they'd like to buy. Remember, when they're buying, they're not buying $100,000 worth. They're buying millions, and maybe they got filled here. Maybe they moved their bid a little bit. They got it filled here, but then maybe they're still holding some bids here that they wanted to buy, and they bought it here. Now they're like, okay, well, we'll average down here. For them, when they're averaging down, they have the capital to do that. You know, they will stay solvent more than you will stay insane. So for you, it's basically to understand where the VPOX is and expect a bounce. When we did the watch list, I believe, for Friday that night on ES, we knew where it was going to bounce, and it did it overnight. And then we did it again the same day, and it bounced 7 points off of the same level. So now, let's say I want to add the candles here back. So now let's just see how the price reacted to all of the levels that we showed, right? So let me see here. I'll just go hide these studies for a second. So here's the VPOC that we had at 447, and you can see if I was to go maybe on a little bit smaller time frames. Let me see which line is it now. Where is it? So it's this one here. And as I mentioned, usually what I would do is I would do something like this, find the closest volume area on both of these. And I'm not looking to be really wide area because then it makes it irrelevant. So let's see, 447. So let me go kind of on. So now if we look at the 447 area right here, you see that we dipped below it. I believe that almost happened after hours. Yeah, it happened after hours that we dipped below it. This is where we expected. I said if it touches here, that is going to be a great bounce. Then we dipped below it, and this was the rally that I think a lot of us took on Friday, and then we ran it up. But you can see multiple times it hit the VPOC here, it peaked here, then it came back, and then once it lost it again, I mean, we went below, right? But I think this happened closer to the end of the day. So then we lost it again, and then there's a VPOC right here below. So on Monday, there's a high chance that if we don't gap down and they don't do it pre-market, you know, or after hours, if we come here, there's a strong idea or bounce coming at 434 to go all the way to 442. I don't want to get too much in the watch list. I'll post one tonight. But does everybody understand the concept so far? Is it any better for the new people?
Yeah, that's super helpful, Shorty. Thank you.
Anyone else? Do you have any questions on VPOCs and POCs?
Part of the VPOC you said there's a high and a low, but then there was a gray area on some of them that were above and below. Is that just like the extreme outliers?
Which ones? So here, well, I didn't have candles, right? So I didn't know. I was just trying to draw the supply and demand zones.
Yeah, no. Can you zoom in on one, man?
Which one would you like to zoom in?
Any VPOC, if you just any volume profile, if you zoom in on, sorry, not VPOC, in the volume, I mean.
There.
So like you were going off of those blue lines, right? As the high and the low.
This one here?
Yeah.
So are you talking about drawing the demand zone, like the little squares that I do, or?
No, maybe that's what it was when you started. You mentioned and you just titled them. You said so. Like the yellow is like
Oh,
your
yeah.
profile
So,
line, and your blue lines are your high and your low. So you
this
just
is your POC, correct?
Mhm.
And this
Yeah.
one here is your value area high.
Mm-hmm.
And this one here would be your value VAL, value area low.
So what do you consider the areas slightly above it and below it in the gray volume? Just you don't worry about them, basically.
Well, it's not to worry about them. Usually what happens on the volume profile itself, if you read more about it right now, I'll give you some resources that you guys can read on it. If you look at, for instance, this day, it's a little bit more interesting than this one here. It's basically a full belly, meaning a lot of the volume was concentrated in here. We're actually in, let me see, Monday, Trying to figure out the timing on this. So we were actually in an extended type of day, right? Extended typical day. I don't know if you read about that, but here was extended typical day. This was your opening range high. This was your opening range low. So it was a tight opening on SPY, right? So if you look at it, 454 to 451, it's pretty tight compared to some other days. If you look, it will have more than $3 range in the initial balance of the market. So for me, what I would look at it then, especially on this one where you have like a POC, and then below you see that it's creating almost like a mini POC right here. You see like this one right here, like there's a little gap here. It's called break-even zone between the supply and demand zones. Usually if I was watching this and I was naked trading right before, let's say 10 o'clock, you know, I know there's a top trend line, but I also know there was a mini POC created here and here. You see that there was a break-even zone twice. There's a gap like right here of no volume profile, or skinny belly as we call it here. And you see here, right, there's a skinny belly. So multiple ways you can play this, right? When you're looking at the volume profile, you can play this around, you know, volume profile POC, the yellow line itself, or if you have this trend line drawn and you see that there is a break-even zone that is going to kind of gap through it as soon as it hits, and that's usually what happens on these. Whenever there's a gap in the volume profile like this, called the skinny belly, or like no volume at all on these prices, it means the buyers or whoever, the sellers, are going to accelerate through it. And then you see, once we came back up top, we came back for the retest of that area to make sure that this area is valid for the buyers. And for this day, they defended that level, and then they got kind of shit, you know, up and created a higher value area. You see the value areas are kind of going up. The buyers and sellers are agreeing that yes, this value of this asset needs to go up. They increase the value here, they increase the value here, and then you just kind of keep going. And you see the value area keeps climbing up. It keeps moving up. As soon as the value area gets kind of together, and this, you can anticipate that something is going to happen, that we're going to have a little pullback at some point. You see like this area here, you know, in the real world, you can call that like a distribution, but here it's telling you, okay, we create a value area. We're getting a little stagnant. We're not, you see how here we're creating a value area. Then you're making lower highs on the value area high here, 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 and then this one took it. But you see how quickly, if I was to kind of look at this level from before, like this level here, they came back for a retest, didn't respect it really much at all, because all of these were like a little gap ups. Then they got here and literally dumped it from 471 all the way up. I mean, that's 40 points. So just looking at it and understanding the psychology of what's going on will help you tremendously.
Thank you, man. That's a great explanation you just gave.
So on the value area high, so here you see the congestion. Once the value area highs are broken, they usually come back to be retested. Most of the time they come back for a retest to make sure there's buyers, but understand that there's a value area high, low, and a POC. And in the training, I'll just point to it real quick, and I'll tag this for you guys. Let me see, come on. So if you look here, there's a little bit of rules that we have for the volume profile. So I suggest you guys read these. Pay attention to rule number 8. This is the one that can be your money maker a lot of times. Number 7, we covered. And all of these, as you kind of start watching this, it will make more sense and you'll be more familiar with the volume profile and how the price moves between, you know, the real POC and the mini POCs that we just talked about, like this one right here. Mini POC, the full POC right here. So it's good to understand where they are from day before, the day after, and then if there's any VPOCs, I usually chart them on my levels and they play to perfection, honestly. And I think everybody in this group uses VPOCs. So, and a lot of us are not familiar with this. It was almost something new for everyone. So for the new people, you're learning something, but there's a lot of guys that are learning with you. So don't be afraid to ask questions, because a lot of them also are not familiar or experts with it just yet. But here, you know, we can expect on ES. So these are the key levels for tomorrow. We have 4344, most likely will be a bounce. and then you have the VPOC right below that at 4297. And if you guys pay attention to any flow, we have the, what is it, Trade Delix or whatever the tool is. You can use that to see the sweeps, you know, what's coming in, where the big money's going. And then also under the chains here, if I look at SPY, for instance, I don't know who's familiar with Thinkorswim. I'm just giving you a quick lesson. You know, you have your option chain, and a lot of people don't know this. But here on the right are your expected moves for the week. In the parentheses, it's telling you the move is supposed to be like this much in the parentheses. These are the expected moves for the week here. Like it is pretty wild, but like look at Tesla now. So they're expecting a move of about $100 on Tesla. So I don't know the earnings on Tesla this week, but if it is, that's the move that they're expecting on Tesla. So then if you want to learn, you know, what is going on statistically before I enter the calls, just the broader market, right? If you look at today's options and statistics, well, I think this is first time since March 2020 or February 2020 that the puts to call ratio is favoring the bears. So the sizzle index is at 1.259, meaning that there's a lot more puts right now on SPY than there are calls. And then it kind of breaks it down between the delta and in the money, like at bid or below value. So you can kind of see, you know, is it hedges, is it not hedges? So that way you can kind of engage and understand where the big money is. Once you're done with that, if you go to option times and sales, and I usually sort here by quantity just to see, you know, what are the biggest orders that came. So like June 2020 at 500 calls, somebody went in big. I mean, it's part of a spread here. We would have to find this and see if this is what he's doing, buying the 498, selling the 500s. So paying probably about 30 cents each times 25,000. I mean, it's a lot. So there's a decent size bet, right? It seems like on calls. There's another one here. I think this is the same buyer. Same buyer here, same buyer here. And then you see some February, you know, 18 bets, which was the highest puts that I've seen, was the 450s and then also 430s that they were loading up. So that's what I do, you know, in terms of looking at the screens, knowing where the VPOCs are, and kind of putting it all together. Where's the demand zone? Where are the buys? Where's the supply zone? Where the sellers going to come into the play? And once you understand these levels, honestly, it becomes so much easier to play. Because here, you know, if you grab this here and you put the stop loss, let's say you took the trade once it kind of reclaimed this demand zone, and you put the stop loss right here, you would have been just fine. You took the trade, I mean, you drove it almost, this would be like 40 points. And this happens literally on every stock that we, you know, that we do analysis on. So the more familiar you get with this, the easier it will be. So here's the VPOC on Tesla here. So if you look at it, Tesla's almost, well, they just tapped 930, like right here. They're $5 away from this VPOC here. And then they don't have really a VPOC here, but there's a little demand zone that's created on the bottom here. So on Monday, is that tomorrow? Tomorrow we can watch this level to be defended. Most likely it will be the 900 level that gets tested tomorrow. Okay. Any questions on VPOCs, or let me just kind of switch to this course here. I can read if you guys are asking questions. Any questions by anyone?
On you briefly showed the expected move in parentheses.
Mm-hmm.
Does that change? Is that the stock move, or is that like the expected option move? So like if you look at like a Tesla 900, would it be different from a 950 is what my question would be.
Well, the further away you are from the money, right? The IV also changes. So that will imply the move change. So basically it's a straddle calculation. Closest money in the put, closest money in the money call times 0.85. That's how this is calculated. So you take the closest money in the call versus put times 0.85.
Okay, so it's based on it varies per option. Gotcha.
Thanks,
man.
Yeah. But that's the rough estimate on the math on how they figure it out. For the POCs, So good question. For the POCs, this is the time frames that I use. I use 30 days, 30 minutes is my base setup on it. So if you look at it here, 30 days, 30 minutes is the one that I use the most. If I see like what we are entering now, a little bit of a correction territory, is that we're entering a little bit more extended levels that we are hitting, right? So here we are hitting levels from, I believe, like October or before. So if I did 30 days, I wouldn't see these levels. Then I would switch to 90 days and 1 hour to make sure that I hit any other POCs, because it seems like we're going to hit some really, really far out VPOCs. So that way I switch to 90 days, 1 hour, so that way I can capture more. And it's better to do it in Thinkorswim because TradingView limits you only 30 or 45 days max, just the platform itself, just because the rendering of the data, they really are not the best for it in terms of pulling a ton of data. Okay, so on the VPOCs, can you give an example of rule number 8 for volume profile? Yeah, sure, but I'll ask you first, what do you understand about it? Morbid. Can anyone explain what rule number 8 is on the call?
If the price enters low or high, it's got an 80% chance of making it to the other side.
Yep, and there's a little piece to it that you want to make sure you get it right. It's about, has it been tested before?
Gotcha.
So if the price, if you read like verbatim what I said, once the price enters the value area and it has established itself inside the value. So let's say here, it entered and established itself inside the value. Would you guys agree? So we open here at 9:30, we enter the value area. I would say it established itself inside here. Agree? So now it's trying to peek through and it came back here again. So here, once it's in this area, there's an 80% chance that it's going to go to the bottom here. And I would say that 80% was pretty accurate on Tesla itself. Once it reclaimed here, it was a little choppy here, but eventually it came all the way down to the bottom of this value area.
That'll be changing throughout the day as well, right?
Well,
based on the volume that comes in, the top and the bottom.
Usually it is set by 11:30 or so. This value area high and low are pretty set. Within 2 hours, you will have a range that will act as the rest of the day. May expand a little bit, yeah, definitely, but depending on the volume and where the buyers are finding the responsive buyers or sellers, this can expand a little bit or come shorter.
Yeah, I like the toss version of this. It's a lot more easy to view as opposed to the TradingView one.
Yep, and all of these studies, like this one here, is actually shared with you guys and under the TOS resources. So you guys can grab the same studies that I have for volume profile, the VWAPs, on Thinkorswim and load them up.
Yeah, also not sure if this is the scope that you're intending for this meeting here, but how do you get it so that it's not showing the pre-market and it's showing the your Friday and by hour?
So if you don't, well, if I understand the question, so if you don't want to highlight the session here, you can include the this button here, and you see how it.
I gotcha.
So it tells me
do one, the other, or both. Gotcha.
Yeah,
I hate that highlight. It pisses me off.
Yeah, sometimes I keep it on just so I can kind of know where the pre-market high is really quickly without kind of figuring out the timing of it. So I usually actually keep it on to help me with the visibility of where's the pre-market high or low. Because those levels, if you look here, they become fairly important as well. So here's your pre-market low, and you see how we kind of went under it. So what was support before, it became resistance again. And that's a really, really critical concept for all of us. So here, support, you dipped below it, you came back, dump, came back, dump, and continued, right? So this support became a really, really strong resistance. So that's the only reason why I sometimes highlight it, just to kind of help me with understanding without kind of looking left and right. Where is it? Okay. So any questions so far on this? Is it helping your people understanding what these lines are? Okay, perfect. So now that we know, how do you draw the demand zones and supply zones and VPOCs and the purpose of them, I think the next step is that we add the orbs. So for many of you, right, so you have the TradingView orbs and they're identical to my orbs here as well. I also use TradingView because it's a little bit cleaner for me, the way it looks. But starting here, if you look, for instance, what the rules are, if you read the guide that we posted in Trading 101, the rule is that you take the trades off of orb high, orb 50, or orb low. There's multiple ways you can play. If something is, the market's really, going well and it's green and it has momentum behind it, if it's kind of dancing around the orb high here, hitting it multiple times, you can wait for the break here and go along, or wait for a retest and then go along to make sure that you're not being faked out. So that's one setup of using the orbs, is using it with the break of the orb high just by itself. What I like to do, and a lot of people here, is that we look for confluence points. We want to make sure that we have at least 3 points that are agreeing into a direction that we're going to take it. Whether it's long or short, you need some confirmation. So for that, let me say, I'll add the VWAP here. So now we have the VWAP here, and that will be used as a second confluence. So you have the orbs that can be as first one, either levels, orb high, orb high, orb high, orb 50, or orb low is one. Then you have the VWAP, and then you have the POC as well that can be used as a confluence point. Then the last one is just a trend bar, right? And all of you guys have it. So if you look at the trend bar here, it's actually to be used for your entries and to help you stay in the trades longer. And for all the newer people, I do suggest you go use Ashi candles at first. Just kind of you avoid being faked out too much with the regular candles. And I suggest you use 3 or 5 minutes, minimum. A lot of you guys like to use 1 minute. I don't suggest that you use 1 minute because you'll be faked out a lot more on those type of plays. So for instance, on Tesla here, if you're looking at Tesla, there was a couple of ways where we could have played it, right? So the orbs don't come out till 10 o'clock. So don't freak out on Monday. Here's 10 o'clock right here. So the orbs showed up and we are already here on the POC. So then on this one here, you could have taken a couple of trades here. So you had the reclaim of the trend bar here. You had the reclaim of the orb low, and then you had the VWAP, but it was basically stuck in the zone here. It was really not moving much, and I'm just going to pick on somebody. What kind of day did Tesla have here? What type of day do we have here?
Is that a typical day?
It would be extended typical day, because eventually they broke the trend line here on the bottom. You see here, we broke through it. The initial balance was here and here. Usually what happens on extended typical days, the top or the bottom is lost and they can't hold. And then they break that line. So here they broke 950 and went to 936. When you see something is ranging like this that looks like a typical day, it's really, really difficult to trade typical days. And all of this information for the newer people is under the Trading 101. So if you're to look, let me just give you an idea. So let me move this over just so you guys have the visual while I'm doing this. So if you look at the extended typical day and you look at the picture, the opening is not as wide as a typical day, but eventually one side is going to win, whether it's bears or bulls, but it's going to break the line and then continue down. So that's the extended typical day. As soon as you can recognize the type of day that we have, it makes it easier for you to trade and know, what direction and what you're waiting for. So for instance, let's see, Amazon. So for Amazon, same thing, the orb high was set here. You had and look what they did. Well, I have too many lines. You guys are probably like, which one? Here's your high, here's your low, and look at this. So you could have, if you're patient and you know what they're doing, It's extended. It's a typical day so far, and then until about 3 o'clock, they literally dumped it almost, what, 70 points? So it's all about patience. If you waited here for long enough, you could have been pocketing money on Amazon. You know, we open range high, we're far from it. So the wider the range, it takes a lot more time and a lot of buying or selling to break the level because the range is pretty high. So if you think about it, from 3,018 to 2,900, that's, you know, $118 range on Amazon. So in order for it to go from here to go to the upside, to me, it's less probable than it is for me to break it down, right? Just logically speaking. If you're already here and breaking down below the or below 2950, probably high chance that you're going to revisit the or below here, and they did, right? The initial balance low was revisited, and then it just kind of continued down. Does that make sense, the type of days? So at first, you're probably going to see the typical day. Like this day, you're going to see probably 80% of the time in a month. It's called typical day because it is a typical day. So these days are the most seen in the market. 80% of the time they're these. Then you have the extended typical days, which basically they break the range, tighter range. And then you have the double distribution days, which is, we haven't had any of these lately. 2-3 weeks back, we would have these where it basically consolidates on the top a little bit. Like you would see a consolidation here on the top. And then they would find a kind of area on the bottom where they would consolidate, pop, and kind of stay in the range in that direction, either up or down break, or just kind of stay in the cloud for the rest of the day. Meaning the new value area was found. We couldn't hold this one. They didn't agree on the price. They go to a bottom one, and then they agreed on it, and now they kind of are content to stay in that range. Does that make sense on the double distribution day? So it's basically two ranges. You'll have, and I'll post some pictures on here as well, and it's in the guide that I'm building, so you guys should be able to kind of recognize it. And then you have the trend days. These are the rarest days that we have, right? So usually when you have a trend day, think of it, you know, I gave you guys a couple of analogies here. If you have like a sprinter, right? He's literally running that dash, and he's just going and accelerates. He takes a little stop, and then he just continues going. So there's no pulling back, making lower lows. He's making higher highs and higher lows and constantly going up. And, you know, we've had some trend days, but they were bearish trend days recently. All of these days make sense? Oh, nobody confused? Okay, perfect. So now that we're done with this, so we covered kind of the orbs, we covered the volume profile, just to retouch the points on the confluence point. So here, the way I would look at it is you have the VWAP that's in the price for Amazon. You have the orb low that's also there. And we know, you know, the range of the day is pretty high, that there's probably a high chance we're going to come back once we break this to the bottom. So for me, there's one right here, which is the confluence of VWAP. Then you have the trend bar and the orb low, which is 1, 2, 3. This is not a bad trade to take here at all. And then, you know, if you're not confident on 3 minutes, just use the 5 minutes, right? Use the 5 minutes for your trading, and I promise it'll help. So here's 1, here's 2, 3, and then you see your trend bar. The price only went up here above it. If you're, you know, really risk averse, then yeah, you could probably get out knowing that we're getting closer to the initial balance low here. You trim your positions. You don't need bangers of 100%, 200%. If you take 1% every day of your port, or even 5% of your port, you will realize how compounding works and how powerful it is. Okay. Last point that I want to add for people that, you know, that are familiar with trend lines, right? So anytime that you have higher high plus higher low, this becomes a bullish trend. Okay, lower high plus lower low would be bearish. Any other combo that you have here, you basically connect the higher highs to lower highs, and you connect your lowest low to the next higher low or lower low, whatever the trend is. So here we had the higher high, we had the lower high. You just connect the top trend lines, right? So you have two touches. So here you had the lower low, here's the higher low. You connect them, and a lot of people that, you know, when I try to educate people on training and on trading, is have less indicators, like whether they are stochastics. And if you use them and you play them for divergences, yeah, incorporate them if you're comfortable, but don't get the paralysis like from analysis. You can use the price action by itself, literally. Like here, if you just use this, you would have been okay making money, right? So if you take the break right here of this, you can drive that down. And what I suggest for everyone that's new, learn how to look at the charts and find triangles and patterns, whether it's falling wedges, right? Whether it's something like this that looks like this, or if it's a rising wedge, if it looks like this. Get familiar finding these patterns, so that way you can kind of get into the trades quicker and be a little bit more realistic than, you know, getting premature, or look, we're going long here, I'm gonna go, and it didn't really break the trend line. Give it time to build out the trend line, and then it makes it a lot easier to trade. So let me not delete that because so for NVIDIA here, this was Thursday, I believe. Yeah, this was Thursday. So a lot of people on Twitter, not going to name anyone, but a lot of people on Twitter here were saying we are in an ascending triangle on NVIDIA. You guys see the ascending triangle?
No.
No,
Why
not at
not?
all.
Why not?
Because you're in a downtrend.
Exactly. So a lot of people, a lot of newbies, retailers, and I guess, you know, Twitter furrows like that know what they're talking about. They said that NVIDIA has a strong ascending triangle building up for the rest of the day. Okay. Ascending triangles only work when you're ascending higher. It should look like this. The move should look like this. Then you get a flat top, and then you're making higher lows. It should look like this. This is an ascending triangle. This here is a bear flag. You're going higher high, lower high, lower high, lower low, lower low, lower high, lower low. And now here you consolidate it, but you're still making lower highs. You still did not take any kind of relevant peaks here for the, you know, for me to trust you to go higher. And I'm only on 5 minutes. So here was a good example of using just the trend bar, trend lines here to figure out when to get into a trade. And I believe some of you guys took this trade on Thursday on the video. So here, if you took the trade and you're like, okay, well, I don't know where it's going to go, right? I'm using naked trading, and how do I know where it's going to stop? Well, if you're not familiar with the Fibonacci's retracements, it's a little percent sign on Thinkorswim. So if you go here and you select the lowest point of a triangle, which is your lowest low, to the highest point in the day, you can definitely use these as targets for your for profit taking. So you can tell here your first one, and I'll just go into a regular candle so you guys can see it. So you can tell here 127 was a pretty good entry exit to trim some position. Then you have the 1618, and if you had multiple contracts, 227 should be your last trim for the day. And then you see, you know, reversal. So here the day before that, so they struggled on the previous day close right here to reclaim it. They went above it, they went below it here, and then it kind of went down, continued down. But the triangles, the patterns, you got to be able to recognize. You just got to know how to use them. You know, saying that something's an ascending triangle when the whole stock market is in a correction mode is just ludicrous to me. Like, I just don't understand why would you portray the idea to masses of people that, you know, hey, we're gonna go higher here on the video and make people lose money on it. But so far we've combined a few things, right? So we had the POC, we had the POCs, the VPOCs, we explained the VAH, VAL, and then the confluence importance. Does everybody understand how to trade this so far? So the ASHI candles do not have as many fake outs. So they do use previous candles information to create the new candle. The regular candles do not use any information off of the previous candle to build a candle. So the Ashi candles are a little bit more, like, I would say, jumpy than the regular candles, right? So for you, if you're not comfortable, it's much easier to use Ashis and not be faked out, because it takes a consideration of the close and open of the previous candles. And here, I mean, even if you're trading before 10, guys, I mean, here, let me just show you guys. Even if you're trading before 10, there's a couple of ways that we can play, and I know Rayon uses this a lot. Not sure if he's on the call or not, but he uses this tactic a lot, where, you know, you draw your trend line. Let's say here, you see that there's a couple of nice entries on the video. So let's see, if you look at this right here, you have kind of like a falling wedge, maybe a channel, and then you pay attention to your previous, you know, highs and lows. So if I look at this on regular candles here, and let's say I'm usually on 3 minutes when I trade. So if you look in the video here, I mean, there's really no reason to complicate the trading much. The only thing that we can control as traders is the entries and your stop losses. So let's say that you wanted to get in on this price action here on the video, right? You see the top trend line is building, so you're still patient. It's 10:30, hour into open, and a lot of traders take a trade in the first 5 minutes. Rule number one in this room, do not take a trade the first 5 minutes at all. The highest IV, the highest profit takers are going to be pumping that IV, and you're literally going to be giving money to the market makers. Market makers lose money on gap ups and gap downs because they don't control it sometimes. If the hedge funds get involved, then it might go against them or whatever. So then what the market makers do in the morning is they pump the contract IV so high. Yes, people are going to make money, but they're going to sell to some retailer that buys it. And then the market makers take that contract and they're like, okay, well, thank you. We're going to go in the opposite direction. And then the contract loses value. And you're holding there and you're like, man, like, look, we're back at the same price. We're going higher, but I'm still red on the contract. That's because they control the IV and they dumped it. They dumped the IV on you. Okay. So the simple way here, I'm just giving you a couple of patterns that you can play. The simple way you can play falling wedge here, you draw the top trend line. You can get in two ways. You can get in on the touch of the bottom right here. So you had 1, 2. You can get in on a touch here when this candle here is broken, meaning when we break this high of this candle here, you can go long. Put your stop loss here right below. And now, does everybody understand the risk and the reward? Who can tell me how I calculate the risk reward here? And then your first profit target is, let's say, right here. Can somebody tell me the risk and reward on this? Who's got it? Somebody's got it. Exactly. So TKL. So that's correct. So my entry here, this area right here is my entry, and this is my risk right here. The reward that I have, so let me kind of make this reddish so you guys can see it. So this is my risk here, and this here is my reward. You guys see that? So whenever you have a trade that's 7 to 1, so 241 minus 234, let's call it, right? That's $7. So the formula for this is basically this. Your reward is your entry point minus the target, or target minus the entry point, sorry. This has to be positive. And then your risk is your minus your stop loss. And you take these, and then basically you're able to know what are you risking. You got to plan your trade. Where are you going to take the money? You don't go in blindly. I'm going to go in here and hope it goes to the moon, guys. No, we don't hope. Like, you do not hope when you trade. You got to have a plan when you trade. So here, let's say this was your first target, right? But that doesn't mean it's the final target. How would I find out the next target? Usually on falling wedges, the top of the trend line is your first target. And here, I mean, if you don't believe it, just test it. Look at this. You took it here at 235, or let's say whatever the level was, 234. You drove it all the way to 240, which is the top of the initial balance high, and this is where you get out or trim. How do I know that? Why not catch some of this move if I had multiple contracts?
Could you draw a fib from that bottom stop loss to your first target?
Yes, you would actually do that, but you would start at the top to the low. So whenever you're doing extensions or Fibonacci's and you want upper targets, you go from the top of the red wedge to the bottom of it. That swing high to swing low gives you extensions to the upside. Swing low to swing high gives you extensions for the bottom side. So you see here, I did both. So I gave myself levels on both here. Like I gave myself upper targets, and look here, I would say this worked pretty well. It hit the 127 here and it struggled a little bit. It hit the 1618 and then it literally crumbled. Why is this one, why is this one so important? Why are these two important?
Golden.
Yeah, they're the golden fibs in life. And I don't know who studied Fibonacci, or if you haven't, there's a lot of relevance of Fibonacci into your life. If you're bored.
Sorry to interrupt you. Can you double click on that and so I can screenshot your properties on the?
Yeah. Yep, we can do that. So, and you'll see that for me, I only have 5 fibs. If you look at a lot of other, if you use a lot of other people or look at them, they will have literally every single one of these, and they will have some weird numbers on Fibonacci. These are, for me, have been most important ones in my trading life, like where I don't need hundreds of them. I just need 50, 60, 18, 127, 1618, and 227. You can enable 2618 just to help you kind of figure out, more extended moves. But usually when it hits 2618, you're in a really trending day, and you're bound to keep going higher. Okay. Did you get the screenshot?
Yeah, I posted it too for anybody who wants to see it.
Oh, thank you. Yeah, and that's also in the guide. I'll probably have the guide here within a week or so, all in there. So this is your falling wedge, and this is just a simple way to play it. What other plays do you guys see here? Somebody's got to see a lot of stuff here. So here's your, your lower highs being created here. So if I was doing this, well, here's your, trend line that you're respecting. The break of this trend line, you can short it as well. So here's your shorting entry. Then, you have a couple of lower highs being made here. It has like a little falling wedge. And this one probably wouldn't have worked out for you. You probably would have been stopped out. If you got in on the break here and this is your stop loss now, maybe you would have stayed in and made 10% or so. But other than that, it was a no-go. When something happens like this, where you see there's another falling wedge, where would be a good entry here? Is this a good entry, or there's another entry that we should pay attention to? This is a tricky question.
The orb high?
Yeah, the orb high would be your entry, because and it would have been a fake out too as well here. You probably wouldn't have been fast enough to make your money here on the break, right? On the 3 minutes, there's no way. And this would have been a stop loss, or if you're quick enough to grab 5-10%, then you probably could have grabbed it here. But you also see that there's some confluence here where they really didn't know what was going on in terms of price, right? So it comes in here, kind of has like a bearish piercing on 3 minutes, then it bounces it back up, and then they break that range to the upside. So for me, this range here is acting as support. Then you have this one here as resistance. And if I draw this line, look at this, one touch here, consolidation, 2, 3, 4, and then it came back from there. So yes, initial balance high is something that they're wanting you to look at. And it was previous, resistance here multiple times, right? 1, 2, 3, but be aware of the one that's also above where they can trap you. So this was a trap for the bulls. Hey, look, nice break on the candle. I don't have the volume turned on here, but it was probably an increase in the volume on the candle to give you a fake, and then they kind of dumped it and came back in this zone here. So this was just one ticker that we could have traded on just price action. So let's look at, well, Netflix was pretty good too. So here's your Netflix, right? I mean, usually when you look at this, right? So if you're to trade Netflix, if you were to trade Netflix on Friday, you want to look at the major resistance right here, where it looks like pre-market, and that's why I keep this gray box. It just kind of helps me see it. You see the resistance here; it's working, right? It's hitting here, not able to get above it. So for me, I would also look at the pre-market lows, and I mark those like pre-ML or pre-market high, PMH. I'll mark those on here, and then you look at the price action. I mean, so here, your initial balance high was right here. Your low was, I would say, here. You honestly, it was not a trading day unless you captured the bottom or the top of the move. Who would be buying here? Does anyone have an idea based on the reading? Who's buying here and who's selling here? Responsive buyers are coming in on the bottom. Who the responsive buyers are is the people shorts covering or buying. I would not, maybe, but these are the responsive buyers more so than short covering. Short covering would continue probably a little bit higher and break the initial balance as they would continue. The bulls would jump in as well. So if you look at this right here, for me, the way I look at it and the way I explain it to you guys in the trading chat, if you're a responsive buyer, that means you're looking for deals. So if you're to go to a shop and let's say you're looking for, to buy a pound of fish, and they say, hey, this fish has scarcity, the supply is really low, demand's high, man, I just can't, I can't drop it below 4 or 5 a pound. And you're like, man, okay, well, never mind. I can't afford a 4 or 5. I'll wait till the fish price drops and the, supply is back. Well, you doing this and waiting is pretty much similar to you buying a pair of jeans. If you know companies making awesome jeans and on Black Friday they'll have a sale and you're, let's say, 2 months out from Black sale, most likely most smart people would wait for a 30-40% discount and buy it at the next support. So for instance, here you created a support and you created something else. What else did we create here? Anyone? Demand. What else? Anyone else? Oh, yeah, TKL, double bottom. So we created a double bottom, which means the auction failed. Meaning, in order to bring it down, they were respecting these levels, and the auction failed. Meaning, the buyers and sellers did not agree that we were going to go down lower and continue lower. Okay, so where's the entry here now? We have the double bottom, we have the trend line. You can get in on this trend line with the stop loss being 380, right? So this is your stop loss if you're getting on this break. But where's the professional way to get in? It would be right here. This is your neckline, right? So here, this is called the neckline of the double bottom. One bottom, second bottom, neckline. You can play the breakup of the neckline like right here, this candle, or if you don't trust yourself and you're fairly new, wait for the retest of the neckline and then go up. Usually what I do is I play the break of it and my stop loss is slightly below the neckline because usually they know you put your stop loss right there, and what do you think they do? They're like, okay, well, thank you for the contracts. We'll take your 10% loss and then we're just going to continue higher. And usually retail is like, man, every time I get in, it goes the opposite direction. That's because the market makers know what their delta hedge is and what's their, what do they need to do, right? Do they need to go buy more in the money, less in the money, sell premium collected to hedge themselves? They're usually, all they're doing is hedging their positions to be delta neutral. Okay, so you had an entry here, right? And you had also a mini, right? If I was looking at it here, you had one, you had the peak. So you had this level here. If you're really scalping, right, you had this level as well that you could have used as a stop loss. So if you use this as a stop loss here, I mean, you would have made nice chunk here, and initial balance high should be your target. Does anyone know why? Based on the days that we covered and type of buyers and sellers, why should this be your target here for the day?
Because it's just a typical day back up to
Yeah, it's a typical day, and most likely the same sellers that drove it here, the responsive sellers, are going to drive it down again. You drove the price here, they still had shares, and they're like, okay, well, thank you. I'm just going to unload at 405. And then they just sold more shares at 405. And then people find the new value area here towards the end of the day. You see that they're consolidating a little bit. And, let's see what happens on Monday, right? So if I was to, let's say put a plan around this stock, for me would be more about previous day high, which we call PDH. Previous day highs here, your previous day lows here. You just mark those levels. Oh, come on. Sorry, this video. This is your PDL here. And then another thing that I pay attention is the close, right? Where did we close? So if I look at the price here, we closed somewhere roughly here. And you can put this as previous day close. And this is if you're sure that you're going to be looking to trade one stock. You don't have to do it on every stock. You don't need 100 stocks to look at. You need to find 4 or 5 stocks and mark them. And I promise you'll make a killing every day for 10, 20% and let your account grow. So like if I was playing this on Monday, I would look for the reclaim of 397, come back for a retest and go higher. And I will look at if we break below the PDL here to take it higher. But then I confirm all of this on VPOCs, right? I would take a look at these VPOCs and see what's going on. So here, obviously, you see how they sold it, but you guys see that the volume actually is not really great. So this sell here, if you look at the relative volume on the candles, I mean, monster candle here, right? Like huge candle in 30 minutes. And the volume, not so high. Here, I mean, it's still much bigger volume, but they didn't really sell it hard. You guys see that? Like relative volume, candle size to relative volume, this tells me that there's some bullish divergence in volume going to be created here. And now you look at it in a bigger time frame, you're like, hey, Shorty, what the hell are you talking about? Look at the volume here. So let me just hide a couple of these.
Hey, Shorty, does that volume carry over because it was an after-hours sell on Netflix?
Oh, this one right here, this is a full day. The start of 4 a.m. all the way to, what is it, 8 p.m.
I meant on the smaller one where it dropped and you said the volume wasn't high on the 30.
Oh, on the 30
Yeah.
here? Yeah, so this is just a pre-market volume, and this is calculated as part of the day volume. This here is calculated in the day volume. So when you look at it on a daily, it's part of the daily. I don't know if that's what you're asking.
So that next huge drop when it went from like 510 down to 410.
This one,
That
yes,
was
here.
Yeah. Wasn't that
That's after hours? Yeah, it was after hours, so it's not part of this. So the day is split. You see this little white dotted line here? I
Yeah.
don't know if you. So this is not part of this here is not part of this day at all. So here it stopped, and this is where the new volume starts.
Yeah, gotcha. When you were talking about that drop and the volume was that high, it was after hours.
So you see here, like that volume here on the 120, not really big. But the next day, that one volume, and for the rest of the day, the selling was pretty good. So then, Netflix is at, I think, like 2018 lows. So if I was to kind of zoom out, and usually what we do and what we pay attention to in the group is the previous breakout levels. So if you look at this on Netflix, right, this stock's been consolidating here for some time. If you look at this level right here, just trying to grab this red candle. Look where we bounced off. So if you look at this, on the monthlies, this is where people on Twitter should be calling this an ascending triangle, right? It's going higher high, making consolidation. This was an ascending triangle. I mean, you literally came back to retest the previous level. Look at this, right with the indecision candle and pop. Just knowing your levels from, extended moves helps, right? So here's your Netflix. I'm pretty sure we can find the same on any stock here. Oh, let's see. I'll just move this. So here's your monthly on this stock right here. So if you look at it, there's a lot of consolidation here before it popped. So 244 probably not out of not that it won't happen, but there's a high chance that we're going to come back to this area here, to 244 on snow. So huge breakout levels, like when you look at it, right? So here on monthly, you see this was a big level, you know, a monthly indecision candle. Then they dropped it to 184, nice hammer. Once you broke this, this was go time. So here, you know, if you're a swinger, right, and you want to swing more, I would literally use these levels as potential entries and for staying 2-3 months out. You see that this was an indecision candle. You can get in this and let this be your stop loss, but buy time, buy a lot of time, meaning like a couple of months, like you're buying 4 months on swings on these when you're using bigger time frames. But pay attention, please, to the breakout levels. Like UPST, as you guys know, has been probably the craziest stock that I've seen in a while. I mean, this made like an insane move. So here you see that, you know, it had previous high here. Let's see, what is this level? So 105. Now, you know, if it doesn't bounce from this level right here at 181, then it has all-time low, which is 21. And it has this right here. These would be the levels that you play. You break below 81, there's a high chance you're going 51, baby. So you short it, and it went from 400, guys. So do not ever make an absolute statement, oh, this stock can't do that. Like it's not going to drop. Well, the stock will drop. Like you can't make rules what the stock's going to do, because this stock dropped from 400 to $92. So all the people that believed that, you know, you're not going to drop below 200, man, that's a great area. Like, no, you have to be realistic with yourself and know that there's potential for more downside or more upside. When it was running up, people were like, nah, it's not going to go higher. It's not going to go higher. Already hit 170. Then it went, you know, 200-300 and all the way to 400. So don't judge the market. Play the market in front of you. Don't have bias in the morning, whether it's going to be puts or calls. Just play the market. Play the market, see what it's telling you. Is it making higher highs, higher lows? And that will help you tremendously in trading. Even here, right? So for the day, you open, you make a higher low, you make a higher high here, and then you're making kind of lower highs. So here's this, here's your lows, and look how easy that trade would have been. You honestly take the trade on the previous low, on the break right here, on the retest, and look at this. So 112 to 105-ish, or let's call it 107, $5 move here. You could have played this and made a decent amount of money. And it's just fairly simple. I know you're like, yeah, man, you're doing this like right after the fact. No, I mean, I would have done this during the live trading as well. Is I look at it, I connect my lows on the breaks, even if, come on, mouse. Even if you took this trade here on the break, we never broke the trend line. Your stop loss probably be somewhere on these two candles here on a failed auction. So 116, you got in, let's say at 115. So if you look at this, this is your entry right here if you wanted that, or if your entry was this guy. So by the rules, you want to take the trade when the lower low, previous higher low is taken out, because that confirms the bearish trend. So here, if you took this right here, I mean, you would have done pretty well. So you're risking literally how many dollars here? This is your risk zone. This is my risk zone here. How do I find where is it going? What I do is I take my the low that I'm taking here, and I literally take it to the high here. And what do you know about the targets right here? So if you got in here on the break, the 127 was your first one, and look at the 1618. You guys see that? So my risk here, my ratio here is 1-to-1. So 116.52 to 114.52 is $2. 115.52 to 112.52 is $2. So this is a one-to-one trade, not the best risk to reward, but that's where you can manage your stop losses to be tighter than this, right? If you wanted to, you probably could have moved this to be the 1618 and be your stop loss here. Or, you know, if you're a little bit more risk averse, put it right here on the previous resistance and where it was support. So it'd be 115.33. So you'd be having $1.20 for a $2 move, which is not bad. So far, so good. So for all the new people that are on a call, I do not want you to look at the orbs yet. You don't need to look at the VPOCs. I want your chart to look literally like this. The only thing that I do suggest you add is the volume. So it should look like this. Come on, Thinkorswim. So this is what your chart should look like. You should look at these, connect the highs, connect the lows. I can potentially find here at least 4 plays that I would have taken this day. You know, there was a consolidation here. This was one of them. I probably would have, you know, if I'm watching this stock, I would have taken this because it's a mini bull flag that's being created for the day. If you look at it here, you can grab it on the bottom, take it here. Then, you know, you have your previous low that we just talked about here. You can take that on the short side here. And let's say you're like, oh man, it's gonna go a dump. Well, here's your previous lows. You connect your previous higher lows, and here's lower low, higher low, still not making higher highs, right? So for you personally, like from here to here, there's really no indication that you want to go higher. It rejected the previous support that now became resistance. So here, you know, you're still in the trade. Even if you took it here, you're still in it. You have the trend line, and then you had your stop loss, which was this level here, I believe. Yeah, it was this 115.33. And look at this. And then it's even easier to project the levels because you have a nice triangle that's. So that was roughly here. I think I made a slight mistake there, but here we hit all the levels. It hit the 110 and it hit the 1618. And honestly, this is all you need for the beginning. Once you get comfortable with the price action and seeing the type of candles, understanding the bullish engulfings, the piercings, the abandoned baby tops, once you understand that, then you're going to be like, okay, man, this makes it a lot easier for me to trade. And I've seen some of you guys chart when you came in here in the group first or on Twitter or whatnot. I mean, you have 45 indicators. Your lines are everywhere. See the price action, right? So here's, and I also gave you guys a study in the what do you call it? In the TOS resources. Let me make sure it's there. Yeah, it's there. In the TOS resources, if you're not familiar with the market structure, right? So here's your, where is this? VWAP. So, okay. So this is what I gave you as well. For you, this will mark the higher highs, lower highs on your Thinkorswim. So if you're not familiar with, you know, drawing them yourself or recognizing them, just use this. Like, let it load up for you, and basically you'll see it here. But for me, I'm able to see it. You know, here's my higher low right here. So it's making a higher low, and it made a higher high. Here's another higher high. Here's another higher low here. So I'll delete this guy. And you just look for swings. So here's a, you know, another lower high. Here's not able to break that one. And then the break right here is your signal to go short. So you have a lower high, and now you will have a lower low. And then you have another, if you look here, you have another lower low. This is previous low here, right? You had it twice. Here's a lower low. Here's a lower high compared to this guy. And then here's another lower low. Here's another entry that's going in. And it kept taking them out. And I mean, you even broke the initial balance low here towards the end of the day. And you guys see how wide the range is? I mean, this is a pretty wide range on the stock. This right here is pretty, 117 to 107, that's $10. That's like 10% range in the morning. So if you're able to recognize the type of the day we are having, and then just pay attention to the previous lows, there's no reason why you should not make 20% every day. Like, there's not a single reason why you can't take these trades on your own once you get a little bit of familiar with price action. Then if you're more comfortable, you add the orbs and you look for confluence points, and you know the major bounce areas, right? If a VPOC, let's say, was right here, I would be, let's say if VPOC was, let me just move it up a little bit, right? If VPOC, major VPOC was right here, and I'm seeing this bull flag here, me personally, I'd probably wait, not take the trade here. I'd probably wait for the trade to go here and see if I get a rebound on this level, whether it's this bounce here that I get, from 112 to 114, which I will gladly take for 20% or more. I would take this trade and run with it. A lot of you guys that are new, that have blown up accounts, and I can tell you why you blew up your account is because you're greedy. You're a greedy pig, and you get slaughtered every time you want to make more money quickly. Am I wrong for anyone that's lost money? You probably at one point had insane amount of money, and you're like, man, I will do great if I just do a little bit more and I do this or whatnot. For a lot of you guys, that's what happens. It's the greediness gets in the way, and you're not taking your profits. And me personally, for every new person that's in this room or not, you only need one trade a day. You don't need to focus on 4,500 stocks. For me, usually when we post the watch lists, if I post the watch list, you guys will see here, you have the top list, which was 5 stocks or 4 stocks in this case. Then we had the second list. The reason why I put the second list is maybe you personally, and I don't tell people just look at these stocks. I'm giving you my educational, what I'm seeing on the levels on Microsoft, on XPEV, and I'm seeing these levels. You're able to look at it and it's like, okay, yeah, I also trade NVIDIA every day. This is the level. Let me make sure I agree with the level. It's not trust the shorty and let me take these trades. No, this is your job to review it, to become more familiar with trading and not literally listen to this. I rarely ever alert, like here you guys will see that I'll alert some leaps or swings, but this group is not about me babysitting you and telling you, hey man, buy this, exit here. I can't legally do that. And I'm not going to get myself in trouble. And first of all, you should not want that. I don't know why anyone in this group, if you're here for, me telling you how to make money, then you should probably just cancel as soon as you have the option to do that. Because this is not about me telling you your whole life what to do. And if that's your goal, then, then something's wrong with you personally. Like you should not want that in your life. So far, everybody okay with, the patterns, the simple patterns that you can play. Usually, if we have the trigger level, the way I play these watch lists, if you have a trigger level like this, let's say Tesla about 106, if you're in the morning and you see it's running, do not chase this. Let's say, let me look at Microsoft for instance. I know Microsoft did some crazy stuff on Friday. So Microsoft, we said below 300, I believe we shorted, which was kind of like right here, which is pre-market low here. Let's just mark it. Okay. So let's look how I literally would have played this, and I'll go in 3 minutes. So here's the 3 minutes. You could have taken this trade here, which would have been at 9:48, so it's past 5 minutes. And I personally probably would have taken this trade short here on Microsoft. And I probably would have been out on this trade as well. In the morning, your goal is to make 20% as quickly as possible till you see the formation of this. Till you see the formation of, double bottoms like it's happening here. You have 1, you have 2, here's your neckline. Then you take a long here, right? Let it come back for a retest. Here's your retest, came back, and then you go higher. Me personally, trigger level here, you can take it, or I guarantee you 95% of the time, you're going to get a retest of the level that it just broke that we marked, whether it's a psychological 300 level or whatnot. But here, same level, and you probably got a little bit more value on this one here on the drop. If you miss this one, do not chase. Don't chase this. Do not chase this. Let it go. You will find another opportunity. Stay on the same stock and just watch it. Here's your double bottom. And this makes it so much easier. Here's the first double bottom right here. Second one, here's your neckline. If you do not want to go over 300, that's fine. Don't go over 300. Take the neckline. And it's also a break of a trend line and putting in a new higher high here. So you broke it, wait for a retest, and then go. And then how do you know where is it going to go if it's happening before 9:30? So here's this, obviously none of these hit. So for me, if you want to take the neckline, the previous high, and kind of replicate this is not a bad way to do it as well. But know your targets and know your risk, what you're risking. If you're getting in on the neckline, know that, for your risk, you should be somewhere close on a 0 DT, so probably about 80 cents here. And you need at least $1.50 move from your entry. So here you need $1 move 50, so about 301.5, you should be trimming some, and the rest you trim, above $1.50. If you apply 20% gain and 10% stop loss, reach out to me in a month if you're negative. Meaning, take 20% profits and your risk is always 10%. If you're losing money after you apply this and you stay disciplined to it, reach out to me, because there's no way. There's no freaking way that you'll be losing money if you're to do that 20-10 rule. And by the way, what kind of day is this? I'm just going to keep testing people.
Extended typical day.
Yep. And for all the new people, what made it non-typical day is they usually do it late in the end of the day. And that's what's in my notes. They usually break it at the end of the day. They bore you to death. You can short here on the initial balance high and go long on the bottoms here. Even if you went long here, I'm pretty sure you can make 10% on this move. 297 to 299, you will definitely make 10-20%. Okay. One thing I want to show you guys, a lot of you guys, and I know younger guys here, I'm a little bit older probably than some of you, but not all of you, is this here. It's just for you to understand, you do not need, yes, you will make sometimes 100%, thousands on swing or leaps, but that's the money you're willing probably to lose 50, 60% over time if you're buying, bigger time contracts. If you're buying like leaps 2023, 24, you can afford to lose. But every day, let's say like we started a 1K challenge, my account's at like 1,600 and some change. The goal here for me is to compound and show you how it's working. So if you look at it here, if I start with 1,000, if I do, let's say 1% daily, this, and let's say I calculate it. Okay, maybe not. Let me go here. I knew one of them was not working. So let's do 1%. We'll do 2 years here. Let's do 1 year. 1 year, we're going to do compounded daily. You make 1%. What do you guys think this is going to be? Anyone? Don't cheat. So let's just look at it, right? If you do 1% daily, you're going to be at 24 grand in a month. In a year, I'm sorry. And this is your breakdown by month. First month, you'll be at 1,300, 1,700. So for us that started this 1K challenge, a lot of you guys are well above. Some of you guys are even higher than I am, which is good, which tells me that you guys are learning. So if you're at 1,600, you're already enough in month 2. You're already a little bit ahead of the game. So why not do this, right? And for some of you guys that, let's say you have a bigger account, well, just think about this. You take 5,000 and you compound it daily. Well, in 1 month, in 1 year, you can be sitting on 121 grand, but that's not being greedy. That's you taking profits at whenever you hit the target, you take your profits and you step away and you go do something else. It's not about, oh man, I made 5 grand, I'm going to go make more. No, you really don't need it. Just let it grow here. Every day, let it grow. Every day, every month, let it grow. And eventually you hit this. And that's why it's important that all of you take your profits at 10, 20%. It's crucial that you guys get comfortable and not get greedy. And some of you guys, I've even called you out. I'm not going to name them. People post in the profit section and then the next day they're like, man, you went negative, it went red. It's because you either overtraded you wanted more profits and you got slaughtered because you're a greedy pig. So stop doing that. You got to change something if you've been red before. You got to change it where you're still making money, but it's progressing higher. Okay. So I usually, good question, Tola. So usually on my entries, I stay below 30% per trade. So, and my stop loss is usually 10%. So if I take a 30% trade of a 1,000 account, that's $300. My stop loss is $30, and my gain would be $60. And if I see that it's pushing more and higher, then that's good. Like JD, I stayed in. I had 3 contracts. I sold 2, 430%. And I swung 1 because my risk is a little bit lower now on this one. And if we dump over, over the weekend, JD goes to 70, I'll be in the money. So this would be like 300% play. Okay. Let's see what else we had. We had. Okay. I think we're moving a little bit faster. What questions do you guys have? I know I've been talking a lot and I need some water. No questions. Well, I did that good today. Well, pretty good. Somebody's typing, so I'll give them a minute. But I think I honestly want what I wanted to cover was this. Make sure that there's a video on naked trading that we posted under trading. That you watch that. It's one of my friends, Tom. He does a great job explaining naked trading. It's a 2-hour video, about hour 40 minutes. Watch that. You got to put time on the screen. If you're not putting time and recognizing patterns real quick, you're not gonna. It's not a profession where you literally just like, oh man, yeah, trading is easy. Let me go make money. If it was true, guys, everyone would be a trader. We would not have a single doctor in this country in the world. Everybody would be trading. Like, why do you need to do that when you can just trade? So it's not an easy profession, but it can be a simple profession. And you guys, I see your comments. You guys are saying, yeah, you make this look easy. Well, that's how it needs to be. It needs to be easy approach to all of this. Okay. So if we look at, for instance, Qs. See, I have good levels in Qs. I'm not going to delete them. So if you look at Qs on 1 hour, right? So there's a lot to be concerned about. I think we have a level below somewhere that we identified earlier. Here was your demand zone that we had. I think it was a VPOC area, and we said that we're most likely going to dump through it. If we break the 366, I don't know if anyone recalls it. Well, if you're on the watch list, we talked about that double number here of 366. So we had a plan, right? We had a plan, and look when the plan came into action. So if you look at it on 5 minutes here, I mean, plan came at 3 o'clock. And for all of you guys that are on, wondering like, well, how do we make money? Stop anticipating and forcing trades. There's nothing worse you can do. Like, dude, there's so many trades that you could have taken here for 10%. Here's one, you could have taken it for 10%. This is your break opening range low, initial balance low. Here's the level, which lines up with this demand zone. So 369 breaks. Sure, you knew all the way 366, you can drive it. We knew 366 and below is a dangerous level that we are going to dump literally quickly. So if we look at this, I mean, we did that, right? We dumped about, I would say, how many dollars right here? We dumped $5 in the last hour. So for anyone that's being patient, this is the reward that you're getting. This is the reward that you're getting for your patience. These people that are buying this, these are algos, guys. You cannot be quicker than the algos that they pay millions of dollars for. Like these little moves, you have to be really. I don't trade them. I will not trade this here. There's people that will trade this with shares and kill it. You know, 50 cents move here, if they bought it at 370.92 and they sold it at 373.76, well, on 500K, that's pretty good, right? For each dollar that they made. But for us retailers, you mark the levels and you jump in with the big whales. You wait for them to move and you kind of ride along, like the little shark or little fishies above the shark when they're swimming. You're just a little guy above it and you're just eating the crumbs. But take your crumbs quickly, because if you hold on too long, that shark might turn around and will literally eat you real quick and your contract is zero. So play your levels, let the trade come to you, do not force it. If I'm getting into something, that does not mean that you're getting into something. My account, my risk, a little bit different than yours and everyone else. We all have different risk levels, different approaches. And if you're seeing something like, hey, Shorty, what do you see there? Definitely ask, right? What do you see here? What do you get in? Sometimes I like to look for high risk, high reward, like lottery plays, like on SPX, which I trade a lot. If you're on Robinhood, you should probably get off of Robinhood, and you should, I don't know if you're on Webull, or look for Thinkorswim to kind of switch over. But I trade SPX a lot. And there's a couple of short opportunities on SPX here that we had the day before. You had a couple of opportunities here at 4494. This was the level for shorting, and we kind of did that, right? So this was your opening range high. So this is your orb high. This is your orb, well, probably not orb low here. I would say it's right here. Yeah. So this is your orb low. So you had an opportunity to short it for about 20 points here. Reclaim of the orb low here. Usually take that trade when something reclaims the orb low. Let me bring this up. I'll just bring this real quick here. So if you look at the trading view, right, and if you're new to trading view and you haven't done these indicators, if you go under indicators here and you click invite scripts only, you're going to see orb short targets, orb screener, and then you're also going to have something called Shorty clouds. You're going to be able to see the clouds. We're not going to cover the clouds today because you guys will be so confused, like what the hell's going on. I have all these levels. All the levels that you're identifying is the levels that you want to be aware of in case, you know, the confluence points are lined up or if it's breaking up. So that way you're aware. If you don't know where the levels are, it's going to slap you on the side and you're going to be like, man, why did it reject there? Well, we use all the tools we can to find the potential levels that they're hiding or, you know, showing you that we're going to reject. So here on SPX, right, you can definitely use SPX for trading. It's one of my favorite, you know, instruments to trade. So if you look at this, right, let me go 3 minutes. I am. So if you look at this on 3 minutes, right, so here's your orb high that we talked about. It was a choppy day, right? So we opened pretty high here, actually. I think it was. Yeah, we opened pretty high. We opened all the way at 450, and then we dumped. Once the orb high broke, sure, you could have probably taken this trade. This is where the patience kind of comes in and let it develop. And here you see the orb 50 and the rejection of the orb high. So here you had this level here, orb high. I like to take the trades that failed the orb high in the previous low. So for me, trade probably would have been somewhere around here, the entry to short, 4473. It was the previous low, a nice candle. See, you know, 50% is trying to hold, but then, you know, you're getting some levels. You're getting the ideas here. It broke the orb high. It's telling you the buyers are not really aggressive to take it higher. It broke the trend line on 3 minutes. Then it has the orb 50, and then it has the VWAP, and it hasn't been able to reclaim the VWAP at all. So here, if you didn't take the trade here, as you get more comfortable, sure, then you got to use the orb 50, your VWAP, and the trend bar to take a short. And that's your 3 confluence points. And then if you're not like familiar, let's say like, man, this is crazy, I don't want to do that. Well, then just simply draw the trend line, same way. So here you had the lower high, right? On the break right here, sure, you can literally take this, but it's going to be a quick one. Let the plays develop for you. Let the lower highs, lower ends set in. Like when something is really like uptrendy like this, look for, you know, the bottom of these even if it's not a wick, look for the bottom of the touches of the candles itself like this to kind of go and guide you on taking the short. But this is fairly aggressive here on 3 minutes if you look at it. You know, your true previous low was probably somewhere around here where it's a clear one. If you look at this, this is where you have 1 touch, 2 touch, 3 touches, and it's also below the orb 50 here. So honestly, if you got in on the break right here and you stayed in a trade, you would have done well. You know, all the way from 4463 all the way to 4397. As you guys know, SPX contracts, me and Earth, another trader here in the chat, we like to play SPX because they pay really, really nice. These contracts move from like, you know, $1 or $2 to about $12 really, really rapidly. So that's why we enjoy it and we trade this. Does this make sense on indicators and trading view? And if you have questions on how to set it up, it's all actually sequence posted a couple of documents, and we have mods, or you can ask me. We can help you on setting up. But this is what you're looking at, and then eventually, at first day tomorrow, just take everything off. Just pay attention. Use 5 minutes for the newer guys. Use 5 minutes and look for trades. Right, mark your opening ranges, balances, high and lows, till the orbs come out, and then basically just play the levels that you see in front of yourself, and use, you know, the higher lows, the lower low breaks as entries and exits. So if you look here, just with nothing literally on the chart, you're able to know where. So you have an opening range high here. Here's your highest high, and even if you just took off of this level here, 4467, which was the break of the previous higher low, this was an exact entry that most professionals would take here. 4467, and literally you can drive it all the way and bet that it's going to go to orb low or initial balance low here, and you would have made tons of money on this. But it's requiring a lot of patience, like not running and taking trades cluelessly and hoping that something is going to work in your favor. And you should just stop hoping and play the trends.
You got a question on OI?
Oh, let's see. Oh shit, I wasn't scrolled down. What the Shorty not related? It was OI. Okay. Let's see, how can I get POC information here on TV? So TV, I'll cover that. Good question. Let's see. Okay, so OI, right? Let me make sure I have it here. I don't have it on this one. Let me see if I have it on this one. Okay. So OI, the way you use it is basically telling you what the market makers are most exposed to and what is happening, right? So if you look at this chart on SPY, for instance, right? So let me go a little bit, just give me like 15 minutes so we can look at it. So if you look at this, it seems like for the day that they sold a lot of 480 calls, a lot of 470 calls were sold, and a lot of 460 calls. And then you see that a lot of puts here below 450 were also sold here. And then you have the 440 line, which is not as big, but they closed it below it, right? So market makers, potentially, they might have lost some money here by not being able to close it above 450. But I'm pretty sure they made up off of it by, you know, being open interest. The number of remaining contracts that are left open is what this is showing you. The highest amount was left for 480, and if that's left, whether maybe they sold these calls, right, and now the price is going away from it, they're literally just collecting the premium. The premium is going in their pocket. So if we know that they sold a lot of 460 calls and it's Friday, I would think that they're not going to close above it, right, on that day. Does that make sense? And if you know, this was kind of rare, right, that they had a lot of puts and that they did not push it above 450 close. And maybe it just worked out in their favor. Depends what their other positions are. But this usually tells you, yeah, we have a lot of calls at 480, a shitload. So if we go above it, that means that we're going to be losing money because we sold all these calls and they're going to appreciate more, and we're going to have to buy them back at inflated prices. So instead, what they do is they drive it up below, And then, you know, you see the second line here, they create a trap. People bought these calls, but then they bought like maybe 475s. Yeah, 475 calls here. And they're like, okay, well, thank you. We're going to go lower. So basically they kill these contracts instantly here. Then they're like, okay, it's 470. Okay, well, let me give you a little bit of hope. We're going to go higher. Never mind. We're going to kill it. And they kill these guys, and they kill the 460s. People load it up. They're like, yeah, man, we're going to make a killing here. Nice bounce. We're going to go to 470. They're like, yep, nope, drop it down. So they kept killing the calls and collecting the premium, while maybe selling also the puts that are far out of the money here. If you look at it, right? For this week, they sold some 400s. They sold some 380s. So it was probably a profitable day for them to allow it here. And now if you know that they sold a lot of puts and they allowed it to close below 450, their pain point's already out. They already took a hit on 450s. So now people, if they loaded up on calls, they wouldn't mind this drop to 400. People buy the puts and then strong bounce at 400, which we don't know what the OEI levels are for next week yet. But potentially, you know, hey, maybe 400, because there's also a gap there below 308 and 403, that we're going to come back down here and bounce. And the gap that I'm talking about is right here somewhere. Where are you? Is it this one? No. Oh, this one right here. So you have the gap at 403 all the way right here. And this was a gap, psychological gap, the break of 400, and we really never came back to retest it. So let's see what we do. But I think we'll be bouncing here probably around this level here. But we'll look at the OEI, look at the data that we have. And then for us, most of us in the group that like to take money daily, you just play the levels. If you know there's a key level at 426 in this case, and it's approaching that, I will buy 426 calls and, you know, put my risk right below it and let it bounce and collect the premium. And we did that on Friday as well. Some of us on the bounce of SPY, Amazon, or whatnot. Like Amazon went from 2,900 to 2,500 just based on the action that we are seeing. So if you look at the OEI levels here, they sold a lot of puts here, right? And then the POC was reclaimed, and this move here, believe, what is it, 2,900 to 2,950, 29. Well, I sold here, 2,953. It's just knowing the psychological numbers too. 2,900 acted as a nice support. Then you're looking at the volume profile. Anything risky that you guys see here, that should be kind of like a heads up play. It bounced here, but look at this area right below it, guys. Wrong box. Right below it, there's a low volume node, like low volume node. There's no volume here. It's a skinny belly. It's literally going to slice through that once you break this level, which was a previous support. Once you broke it, that was your $50 move on Netflix. And just looking at it simply, honestly, that's all to it. But OEI, Tola, did that make sense? It's basically figuring out the pain points of the market makers and where they might reverse dependent. You know, we don't see the full picture, what they're trying to do. But at least we know, like for instance, on Amazon, there's $64 million worth of calls and they're dumping this. So that means they're collecting this. Soon you can expect that we're going to see a level where it's going to bounce and they're going to reverse on this, because there's also a lot of VPOCs here. Like you have a VPOC here, you have a VPOC here. This is not a VPOC. There's, I guess, this is not a VPOC, but here's a VPOC right here. So it's setting up for a bounce, but I think it's going to go a little bit more to a downside because we do have those monthly bottoms that are approaching on this in terms of clouds. So if you look at the clouds itself, monthly cloud, where are you? So we know the monthly bottom is right here at 2684, and we're about $200 away. Amazon hasn't been a monthly bottom in I don't know how long, since forever, I believe. So let me hide a bunch of crap. Okay, so if you look at this, and I'm not going to cover the clouds today because it requires another session. So it hasn't really been at the monthly bottom like in a very long time. I'm talking like years. So the last time that it came close to was here. Let me go on weekly. Yeah, so here's the last time that it was there. It was 2008. So if we are to go to the monthly bottom here, there's a strong chance of a massive buying rally and potentially a stock split announcement, something announcement. But even if you look at here on the weekly, just look at the bottom. Like if you look at the bottom here, it's mainly, what do you guys see? Like it's mainly red volume. Ever since here, it's been literally just little spikes of green, but mainly red volume here. And then honestly, it broke the previous support here that was crucial at this level right here. Once it broke that, like the launch pad from before, well, I honestly see it coming with the ER. I'm probably going to play some lottos on this to 2600, 2650s. And we'll cover this in another session, just to let you guys digest for a week or two, learn the naked trading. Don't take too many trades, please. Stop taking too many trades. Look for one trade a day and just go away. Your goal is to gain time and money, not stare at a screen all day and be flat on your money.
Hey, do you recommend them looking at, like a SPY or Qs or something like that, as opposed to individual tickers off the bat as well?
Yeah, I mean, you can definitely look at it, and if they, if you're brand new, then just get familiar with the liquid movements, right? So SPY is considered to be a liquid mover because there's a lot of buyers and sellers. Use Apple, use Qs, which is your triple Qs here. Use the triple Qs as as your trades. I personally like to trade AMD, NVIDIA. I mean, all of these are really, really potential and high liquidity stocks that you can trade. Be aware of, I didn't want to go into it, but I kind of have to, of add. And you might be confused for a little bit, but I'll try my best to explain it. So advancing declining is number of stocks that are advancing from the previous day close. If this is going higher, right, and it's going into the positive territory, like here it was going almost positive territory, I guess it went to 24 stocks being above their previous day close, and then they literally like dumped it from there. We can't predict where this is going to turn around, but we can compare it to let's say to SPX. So if I look at SPX here, and you just want to make sure you're on the same time frames, right? So if I look at this on 3 minutes, I would want to make sure the SPX is also on 3 minutes. So this is happening at 11:21, and I come here, it's happening same at 11:21. So far, all of these were in alignment here, right? I wouldn't say that we saw any divergences here. And it's following the path, right? So this one is making a lower low. This one here is also making a lower low. So I always watch for add to tell me what is going on. If there's a divergence, let's say this is making lower highs and this is making higher lows and higher highs, I'm usually telling you guys there's a bearish divergence here, and I'll be careful, right, on the trade, or watch potential entry on short or long, depending on the divergence. Then the next thing that I do is I'll add VIX. So this is your volatility index, right? You want to pay attention to it. There are certain levels, if you kind of look at it on a daily, that you want to pay attention to, right? So a previous level here of resistance from December was around 25. So that's a level that you want to be aware of, right? If we break this level 25, there's probably going to be more downside. We go to 30 or so, because that's been kind of like the bottleneck for it before. If we're kind of here, we had the levels from previous week. I think it was 19.5. We had 17 or 18. You pay attention if VIX is making higher highs, if AD's making higher highs, or how does it compare to your S&P? If you're seeing divergences, then you just basically play those to your advantage, and you're able to get better entries in shorting. But you do need a confirmation, whether it's a trend line, if you're using orbs, right? Use them with confluence points so you can take the trade. Let me just take away this piece. Okay, how many of you are confused? Okay, Busy, what are you confused about? Anyone else on the call? Well, overwhelmed, yes. So yes, I'm sure you're overwhelmed. And what I asked you to do is not to be overwhelmed and to literally make your chart look like this. For a couple of days, just understand the price action of everything that's going on, right? So here, pay attention to your initial balance high, initial balance low. Identify the days for first couple of days. Know what type of days we're having, right? If this was the open here at 9:30, I guess, let me see, where was it? So this was the open at 9:30. Know what type of days you're having, and then basically look for the lower highs, your patterns, and eventually as you get more comfortable, and if this is working, then we're just going to keep doing what's working. Don't change what's broken. If you get, you need more confirmation for your entries, you're scared, then add the orbs to your mix and look for the 3 confluence points. You'll find those 3 confluence points as you get better. You might not need 3 confluence points. Maybe it's just 1 or 2. Maybe you're just doing the price action right here and you're looking for the breaks of lower lows or lower highs and you short based on that. But don't try to, I'm giving you a lot of information. Don't try to incorporate all of that at once. I'm just giving you everything that I know, and then you're going to formulate, as you get a little bit better, you're going to formulate your own strategy, your own rules, because you can't trade the same way I trade. Your goal is not to replicate, but it's to pick pieces of everything that I'm giving you and eventually find what works for you. What is busy style? Instead of what's shorty style, I'm giving you what I trade and how I trade and how I look at it. Eventually, you're going to have to build your own style of trading, and that's going to make you more successful than repeating what I do. Does that make sense for everyone? Yeah, my goal is not to make you identical trader like myself. The goal is to give you the knowledge, and you trade based on that, what you're building, what you know. But that doesn't mean, don't go having 1,000 indicators. Guys, there's only 3 indicators on this orbs here. You have the orbs, which are your targets, and then you have the VWAP and a trend bar. That's minimalistic. If you look at other people's indicators, they add a bunch of bottom, lower level studies. They add a bunch of dots or whatever the hell they're called, EMAs. I don't use any EMAs. You're welcome to use them. I'm not saying they're wrong, but I just don't use them. They're lagging indicators. I'd rather use something that's more related to the price and volume. So start with the naked chart. For everyone that's brand new, everybody that's been losing money in let's call it, you pretend you know something. Trust me, in the market, I don't know anything yet. They're still learning for me, learning for everyone. Our goal is to trade as simply as possible. So if you can understand charts like this, read about patterns, and I think somebody posted a nice chart, and I have it also in the guide, where you can recognize the patterns, you can recognize the price action, right? And in this trading view, there's something called double zigzag. If you're not familiar with drawing these, this will give you your 1 minute higher highs, lower highs. So that way you can basically tell, oh, okay, this is the lower low. If you break this, then I'll go short. Because you already have the lower highs, that means it's a bearish trend. That means that you get in. You have triggers many ways, right? So if I was to look at this personally, yeah, sure, you can trigger off of the lines, right, of what we draw when we connect the, in this case, higher lows. This could be your trigger here, or I want to trigger it based on this one. So the difference, this little candle that has right there is the risk. Risk for bounce if you enter short. So for me, would I wait and get in? I'd probably wait to get in on break of right here. In this case scenario, because I'm looking at the risk and the reward, and I'm like, man, I'm 433.35, 433.5. I'll probably wait for this entry and kind of go in. I'll put my stop loss right here above where we consolidated previously and just play it. And then you see here, you have almost like an inverse hammer here or hammer, and you see the break here, and then that kind of continues making lower lows. Here's your break of another lower low right here. So it breaks your lower low here, breaks it, and then it continues. It maybe gives you another bear flag. I mean, there's so many ways you can trade it. Here's a bear flag, broke it. Here's a consolidation. If you wanted to take it long, you had the opportunity to do it right here. This was your consolidation right here. You guys see it? So here's your zone. It's consolidating. Once you break this, you can go long. I mean, it's fairly simple. 446 to 417. You probably could have made decent money. Then you extend it all the way here, and you see that zone is fairly relevant again. It comes back, and then it goes about 25 points. Start with an empty chart like this. You don't need a single indicator. Understand the price action, understand the lower highs, higher lows, and then, you know, lower highs, lower lows, recognize them. Okay. Any questions so far on any of this? Anything that we can add maybe in the next class to help you guys understand it better?
I know one thing you said one night, Shorty, to me that resonated, that might help people is, you know, some of these moves happen at the end of the day and a lot of our buying power is gone. So I've been trying to wait to have a little bit of buying power at the end of the day, and it's helped a lot this past week.
Yep, and I usually tell you is that lately the moves have been happening, majority of the moves have been happening towards the end of the day, right? Usually around 2 o'clock to the 4 o'clock, you'll get the move that you're waiting for. And then, you know, if you're jumping in the trades in the morning and you're like, oh my God, this wasn't a good trade, stop. Like, do not trade. Set your own rule and don't break it. Don't trade till, let's say, 2 o'clock every day. And test your patience, test yourself to see if you can do that. I have a mental stop loss. I mean, sometimes when I'm heavy on contracts, I'll put a stop loss. Usually I have a mental stop loss on the levels. That's because the market makers see when I enter a stop loss and they will literally dump it where I have it just to get me out. So I wait and I play it off of mental stop losses. If you're new, maybe you can use the, you know, OCO brackets or whatnot. But yeah, I only trade weeklies unless it's Friday, like what we did on JD, TKL. We played the weeklies. I think we played 75, if I recall. We played 75 puts weeklies, and then we played 70 puts for next week. And I think both of them, well, you know, they went over 100%. But the idea is the zero DTEs will be paying a little bit more than the weeklies. And then once they accelerate, the weeklies will pay more as well. So I usually play, you know, if it's Monday, I play weeklies. I will not swing weeklies. Yeah, my rule is that I do not swing weekly contracts. You're welcome to swing it, but you better be right. You're really, literally gambling if you're doing it, but you know, it's your money. You do whatever is best for you, but I suggest that you be cautious of swinging weekly contracts unless you're hedging or whatnot. Okay. What other questions you guys got? Anyone? Good. Slabby is one of the guys that I've been coaching up for some time now, and I think he's been green lately. Options review, that's fairly easy. I usually play close in the money. I don't swing weeklies, brother. That's what I'm saying. There's nothing to explain. I do not swing weeklies. No, I'm not going to explain that. I do not swing weeklies. I only day trade weeklies. I do not swing weeklies at all. Yep, I mean, the gap risk, and if you're, oh, what the term means. Oh, the weekly contract is basically if you buy on Monday, like let's say SPY has intraday, you know, options, right? So if I go on SPY, so if you look at SPY here, DJ MTEX, right? So on 24th here, you have contracts that expire on the 24th. So if I'm playing the 0 DT, meaning 0 days expiration contract on these, you really can't swing this because if you're on any platform, if you don't have the cash to support a bind, each contract is 100 shares, up or down. So if I'm playing the 24th expiration, that means this contract is going to expire on Monday. if I'm playing the weeklies, that would be the January 28th. So if I go to January 28th, and you see here, if I play these are the weekly contracts. These are the weekly contracts. And usually if I'm playing these, let's say I buy them on Monday, I will not play these on Monday if I'm trading SPY. I will play the 24th just to make sure that, you know, they're cheaper, because here, you know, you see the inflated price on calls, a little bit less on puts. So it seems like they're trying to switch a little bit, right, on the price action that's been happening. So for me, on the weeklies, I do not swing these. I will swing a little bit more than 4 weeks. Definitely not, Shinobi. I will definitely not trade. I don't buy blind, guys. I'm not going to give my money to somebody and I don't know what happens. I will not buy orders till I see a setup, till I see something that's in my favor and my probable setup. Yeah. And for a lot of you guys, if you're, you know, not familiar with the 0DTEs, don't trade them, because on 0DTEs, people get excited. They're up 100% and they don't take the profits. And then the next 10 minutes, they go negative 50%. So if you don't have the discipline to take your 10%, do not mess around with the weeklies, or especially 0DTEs like these. You have to take your profits or they will take it away from you. Yeah, and I only, you know, 0DTEs, 10-20%. If you get a runner, 30-40s, you take that profit and you put it in your pocket and you move on. I showed you that, you know, the compounding. So hopefully people are, you got to start believing in it. If you want to start, you know, with the 1K challenge that we did, it's not late. Like if you do this, and let's say you're doing it, let's see, you're doing it, let's see, let's do it for 3 years. You apply the same concept for 3 years. You're looking at about $14 million. And, you know, as you grow your account from 1,000 to, let's say, 20, your process and your brain are going to be rewarded constantly with a 10%, and you just keep getting better. So if you're looking at this, you would literally gain more confidence, and eventually achieve this, believe it or not. But you have to trust the process and grow. You can't go from here to here on one trade. There's no way. It takes time, discipline, and growing your knowledge. Hopefully that makes sense, and you want to put that in your head that you're going to be doing this and taking profits quickly. Yes, this is 1% gain for 3 years. And we are at 1,600%. We are at $1,600 on our 1K. So in 6 days, we achieved 2 months. So for me personally, like at the account, I'm not going to take risky trades. From now, I'm getting into 2,200s. You know, probably within 3 weeks, we'll be somewhere. 4 or 5 weeks, we'll be here at 15 grand something. Yeah.
Where are you able to do these type of trades, day trades, on which account without having a $25,000 balance? Or
good question. So in Robinhood, and I don't know, what platform are you on? Just
I'm actually using Robinhood and Webull. I'm trying to get away from Robinhood, so I'm trying to do more in Webull.
Okay. So good question. For anyone that's new, I have 1K account here that we started with that I created for you guys. So definitely I'm under the PTD rule now, and you have to set it up as a cash account. In Webull, I will have to rely on others if there's a Webull cash account. I believe there is. In Thinkorswim, there's definitely cash account. Yeah, so it looks like Webull, you would have to either call them. I don't know if you can do it on their website. You would need to switch to cash account.
You can do it on the app. You can change from margin to cash right in the app.
Okay, and if somebody has directions, Cyber Techie, if you can put the directions on how to change it, that'd be great. So basically what this enables you, whoever asked the question, is If you have $1,000, and let's say we bought a contract for SPY that's $400, so I don't suggest you go 40%. Less than 30% trades on 1K is good. If you go 30%, you put in $300. That means the remaining buying power is your balance minus what you spent. Options settle the next day as long as there's not a banking holiday. So if you bought a contract here, let's say you bought the 440s at 2.6, so you have about $740 that's left. Once you spend your balance of $740, you have no more money to trade for that day. Then tomorrow, your balance and hopefully your gains is now $1,200. Now you have $1,200 to trade, and until you spend that money, kind of like zero it out, the zero sum game. Then the next day you get hopefully $1,400, and then it just kind of keeps growing, and you keep getting the rebuying power. So that's why I say if you're on cash account, don't go splurge in the first 10 minutes, and then you're like, damn, man, I missed this. Somebody posts a gain on easy, like, oh man, look, we shorted it here, we bought it for $1, we sold it at $1,100. You miss those easy moves by splurging a cash account, smaller cash accounts in the morning. If you have a cash account and it's, let's say, 100 grand, much easier to keep, don't suggest double down, but, buying up in case you see a good setup and you got a light entry and you can add more. Definitely, right? You want to think about those things. But the cash account is the way to go. I would not, and if you're on Robinhood, I don't know what you're doing on that platform. That's not a trading platform. That tells me you're just not serious about trading yet.
Thank you.
Yep. Okay, so can you go back to what you mostly use on toss orb setting? I know there are a lot of things, but it looks like you have VWAP. It's the same thing. It's the same thing as what you guys are using here. So if I look at this, let me just remove this bunch of crap here. So here's the volume profile that you guys see, and here are my orbs, orb high, and then the same levels as the trading view. If something breaks orb high, your first trim is 127, second trim is 1618. Then you have the daily pivots, which are also shown for you guys in trading view. You have the pivots, you have the weekly pivots, and then you'll find the monthly pivot. In this case, you probably have to switch to something like 30 minutes, and it's right here at 450. So the pivots are also used as confluence points, and then you kind of start putting things together and recognizing, oh, I have a pivot here, resistance or support. If I take it here, it's a better risk reward for me than whatnot. But yeah, same setup. Here's my trend bar. Here's my VWAP. That's maybe just slightly different color. Here are my pivot orbs, orb high, orb 50, orb low. So it's same concept as this right here.
Shorty, do you plan on doing watch list review tonight?
Yeah.
Sweet.
Yeah.
I did have a question. On TradingView, you had the VWAP where it was just the VWAP. Do we have that indicator shared in the TradingView resources? Because I didn't see it.
Like individual one? No, I don't. No, we didn't publish it, but we can publish it. Yeah. We published it with all of it together, but yeah, we can publish it as an individual. We'll get sequence.
Yeah, that'd be sweet.
We'll give sequence some work.
Has sequence finished those lines just on the cloud yet?
No, he tested it. Yeah, we had a fun time last night again. Yeah, he didn't finish it yet, but we'll get on it. We'll get it. I think it'll be much cleaner to have it like as a single line. As a level, kind of avoid the confusion and a bunch of crap on the charts. Okay, so if you got anything out of this, class, 5 minutes, do not take trades, let it settle. Take everything for the first couple of days till you get familiar. Take everything off your charts, literally everything off. Then have another screen where you have, the orbs plus your regular trading, and then just kind of start plotting your levels, right? So you have, ascending triangles, you have the bottom, you keep connecting them, and then start playing small, right? Find some stocks that are, cheaper contracts. Like if you look at PLTR, you look at Fubo, if you look at some smaller companies, right, that are optionable. You play those smaller contracts, right? You have Ford contracts are super cheap. Neo contracts are fairly cheap. You find those smaller cap trades, and you basically trade that. How do you take everything off of TOS? So if you go in the TOS right here and you click on studies, you basically just remove all of this. You hit XXXX, or under settings, there's a little show studies here. If you click this little pop-up here, display the settings under style menu, that's what I do. If I click style, let me enable it here. So if you click this show studies, now it's enabled. And I click on style, there's this show studies, and it just removes them all. So that's how you take it off. And you guys with the 901, you guys are funny. Yep. And then for some of you guys, I know you do the drawing tools. You can also do this where you don't have to go right click here. What I have is like a trend line. I can draw quickly from here. I can grab my fibs if I want from here. I don't have to go to the bottom right. You can do this here. If you want simple moving averages or whatnot, you can do that. You can customize this to be there as well.
Can you grab with the drawing tool as opposed to using the hand? I always have to switch to the hand all the time.
You're talking about this?
Yeah, not using that. It seems like you get around with not having to use that.
Oh, I don't use this at all. Honestly, I barely use it. I use auto zoom, right click here. I auto zoom in, and then I, have this here that I'm using, whether it's the price levels. I don't really use like the bottom section at all. And then, if I zoom in somewhere where I shouldn't have, just auto zoom quickly and then come back to it.
Gotcha.
Yeah. And then we did some active trader setups. And you guys, when I trade live, I do trade with my active trader. So you guys will see me here. For instance, JD here, we're swinging one. For me, the setup is fairly quick. I have it on FlexGrid too. So I have my watch list linked to a watch list for options. I preload my options here. And I think Catching Rockets just gave you guys a video so you guys can watch that to set it up the same way. A lot of you guys, when you first joined, you guys would go on trade. You would click here, and then you would click buy one order. And by the time you do that, Shorty's probably out 5 times in the same position that you guys are in. So what I would do is I would, let's say I'm gonna trade SPY calls, or let's say put 430s on Monday. If I was to do that, I would load these up. I'll remove these weeklies here that are not that one, this one. I'll remove some of these. Let's say Amazon. So I will keep these. And let's say I click on this SPY here, and you see my watch list is linked with the little number 2. I linked my active trader here with number 2, and there's no chart here. If you want a chart, you can also enable a chart here, and it'll chart the option for you. I don't have it. I just want to see this. And then I'm basically on the left side, you put the bids, and you can customize the increments here on what you want. So this one is kind of more tailored towards the 1K challenge now, 2, 6, and increments of 1. And basically, if I wanted to buy something, if you click the auto send, it will just send the order to go through without any confirmations. So that's how I'm able to kind of quickly place a bid here. One contract, I'll buy the market. And then as it's going up, it's telling me also the profits right here. I can see, and it's not like important that you have it, but here I have it where I'm literally, if I had 3 contracts on JD, I trimmed 2, I kept 1, which is basically risk-free now, and it tells me, it will tell you your fill. So our fill on this one was 61 cents. Right now, the contract is at $1.25, and you can even see what is the all-time high of this contract by just clicking on the chart. So if I go here.
Oh, sorry. I was just going to ask, do you use the stop limit to buy contracts?
No, I do limit orders.
Okay, thank you.
I don't. So on a stop limit, are you talking about like here? buy stop limit like this.
Yeah.
What I usually do on active trader, if I see something that I'm not gonna bid here. Like when I'm trying to get an order, I will put it $1 above or a little bit above the market order, and they'll fill me in somewhere around 122. A lot of you are trying to get filled like, oh man, 118, I'll put 120. You're not gonna get a fill. Put it slightly above, they will fill you somewhere here. And then once you get the initial pop, all of this moves probably like $10, $15 away, and you get a fill.
Good to know. Thank you.
Yep. And the loading of the contracts and watch list is fairly important, guys. This will help you tremendously. Like this will help you see the contracts, the prices, the charts. And if you guys, recall, Earth and I, we will actually have the charts of the contracts here. For instance, this one, I always have a chart on a contract. And I think DVOC we played last week. I was literally playing the DVOC contract off of the orb low last week. Every time it touched the orb low, I got in, and I think me and Rayon, we hit a couple of 100%ers on it that day.
Yeah, I think it was only you and me, and I started implementing that as well. It was the DWA call. I had the premiums on a chart, and when I saw it getting near a low point, I just bought a couple and put my stop right under, and it worked perfectly.
Yep, and that's what we did on one that went from $1.60 to $5.
I think you and me were the only ones who took it.
Yeah.
Yeah, that was funny.
I think I took that one as well.
It was a good trade. And active trader work with TV? No, active trader does not work with TV. TV does not have execution side of the house. Okay. What other questions you guys got? Hopefully you guys got something out of the class today to help you, whether you're new or old, to reiterate at least the trading style. Take everything off your charts, not trade the first 5 minutes. I suggest that you read what we posted on the rules of the volume profile. There's a couple of books that you guys should read. There's a volume profile by Dale. I do strongly suggest that you read that one at least 5 times. Trading in the Zone, Psychology of Traders is really, really, really important. And some of you guys that got the book and started reading, I'm pretty sure you guys can attest to how important the psychology of this is rather than just the technicals. It's your emotional state. It's, panicking and, being too excited, not knowing the levels, getting out early, letting the losers run more. All of those things can be established once you have the rules and guides about your trading and you follow and you don't show any emotions. All right, perfect, guys. I think I don't want to cover more. I think we want to see how you guys do and how you kind of perceive the market, where you would take trades. If you take trades, I do suggest that you log the trades. I will, as mentioned last week, I will randomly pick 10 people and kind of see their log entries and see what kind of trades they took. What did they use? Was it hope or was it a setup? And why did it fail? What was their stop loss? What were their targets? So you can expect if I reach out to you that I ask you for your log of your entries, that you send it, which would have your ticker, your option, description of the entry in the setup. Was it a wedge, orb high, confluence point with the VWAP trend bar? It's good that you take notes and you log your entries, because I promise that will make you a lot more confident and you'll find what works and you would just repeat that. Okay. All right, guys. Well, thank you for joining, and hopefully we'll kill it this week as well and see what the market brings. And I'll be looking to see what time I can do the watch list tonight. So I'll send you guys an announcement as I look into it, because my son also has fever, so I have to kind of attend him a little bit.
Thanks, Shorty.
All right, guys. Thank you. Have a good day.